All right, good morning, guys. It is Monday, April 18th, and we're going to jump into a handful of good-looking setups here, fresh off the 3-day weekend. So I hope you all had a good weekend. Hopefully you spent some time with family, kind of reset a bit, because it is back to work. We'll just jump in here, guys. First and foremost, energy. Going to continue to suggest you focus on the energy sector. We still have a daily squeeze. We got the stacked DMAs, we have the green 10x bars, and we got the buy signals. So we'll look at a few energy stocks here. Now, the one that we're currently trading in the options room is Oxy. And you'll notice pretty much they all kind of look the same. They're in uptrends. They have daily squeezes. There are stacked DMAs and there's buy signals. Right? So some really good stuff here. So I think you take your pick. Oxy has got good structure. EOG's got some good structure and buy signals. There's Devon. Devon looking pretty good. Then you got Chevron. Chevron very solid. Again, take your pick. Maybe you like Fang. I think Fang looks pretty good there. You could probably look at ExxonMobil. And ExxonMobil looks great. So all in all, guys, there's a lot of things here in the energy sector that are missing in the semiconductors, the big tech, the financial sector, and just the S&Ps and the QQQ. So compare the chart and compare the structure of energy to say the QQQ. For me right now, it's a little bit tough to want to get bullish big tech. It's virtually the opposite. We have sell signals. We're under the 21. There's a negative histogram. There's negatively stacked DMAs. So in terms of where to focus on the upside, I think we just want to continue to make it easy on ourselves. Focus on the uptrend. Because I can promise you the day's going to come where the NVIDIAs, the Amazons, the Microsofts, one day Microsoft's going to be back above the 21. We'll have a positive histogram. We'll have some positively stacked DMAs. There'll be buy signals. Can promise you one day Microsoft is going to look like this again. I think you wait for that day to come, and in the meantime, in terms of where to get bullish, you don't have to try to nail the bottom in Microsoft. What I think you want to do instead is, hey, there's a beautiful uptrend in energy. Let's just continue to take the easy money here. So I'm loving some energy, guys. And then next up, I think healthcare. Again, it's kind of the opposite of the semis or XLK. There's positively stacked DMAs. So there's bullish trend and structure. We're above the 21. And you got some green 10x bars. So there's a handful of healthcare stocks here that look great. We could look at a few, but then I'll show you my pick. So UNH is pretty solid. ABBV. I don't know if I could spell. That would help. But ABBV looks pretty good. There's old Johnson & Johnson. The classics. My pick, though, is Pfizer. So in terms of, what do I like about Pfizer, we got to keep in mind we're running into earnings season. So UNH, there's a lot to like here. You got some stacked DMAs. There's some buy signals. It's part of a bullish sector. But you're running into earnings. Johnson & Johnson, a nice daily squeeze. That's a really nice setup. For me, though, it's a little bit tough to, come work a position here when earnings is tomorrow. So what I like about Pfizer, it's in a good sector. There's a daily squeeze with buy signals. There's a 3-day squeeze with bullish structure. There's a weekly squeeze. So from a weekly chart to a daily, all looking pretty good here. And you don't have earnings, I think, until like May 5th. So here's something I think you could work a trade 2 to 3 weeks to expiration. And what we're doing right now is we've got calls for the earnings expiration. So earnings is on 503. I think we have got the 506 expiration calls. So good structure there to Pfizer, part of a good sector. And we'll keep on moving on, guys. Next up here is going to be XLP, consumer staples. And before I let you go, I'll make sure I type all this out in the chat, just in case you want to copy and paste it. But XLP looks rock solid. So the only issue here, I don't want to buy it or the names in this basket up here at 2 ATR. So I would like to buy the pullback to the 21. But as far as XLP, there's like a good 3 or 4 candidates here. The one we've been focusing on is Altria. Pretty much you just continue to rinse and repeat the same trade until the trend breaks. But what I mean is if you have the buy signals, if you have the stacked EMAs, you're basically going to sit here, wait for that 2 to 3 day period where things pull back to the 21 EMA. That's where you're looking to get long. Buy the dip, take profits on the pop. We hit this, I think, a good 3 or 4 times. So we'll buy it on the next pullback to the 21. But you could also look at Costco. The buy signal is really good trend there in Costco. And then Walmart, of all things, is looking pretty bullish here. So even a pullback to 150 might be a pretty good buying opportunity. So none of these spots and none of these stocks are sexy, right? I think a lot of us like to trade the Teslas, the Amazons, AMDs. And don't get me wrong, you can trade those right now. Just in my opinion, if you're going to trade AMD, they're sell signals. So if you got a sell signal, what are we going to focus on? Shorting the bounces. So yeah, you can trade AMD. I just think you're looking at it as bearish. You can trade Amazon, but you got some sell signals. Right? You can trade the financial stocks, but you have some sell signals. So what I'm trying to offer this morning is if you're looking to get bullish, do that where you have the good trend and a good structure. So I still think anything in energy. I think you look to buy the dip on XLP or one of the names in the basket. And healthcare is probably going to give us a brand new daily squeeze. And I'm liking Pfizer for now. Then one more group here, guys, all along the same lines is the material sector, XLB. And we've actually got a fresh squeeze on this bad boy, but you got the stacked DMAs. And if you look at some of these material stocks, that's another long list. You could look at Freeport. I wish you didn't have earnings in 2 days. If we didn't have earnings in a few days, I think it's a great trade here. But Freeport looks really good. And you got Newmont Corporation, NEM. So as long as you got those green arrows there, you want to buy those dips to the 21. So you set a few alerts, you wait for the dip. Then there's Nucor. Got the green arrow, wait for the dip. And that's where you build that position. So energy, healthcare, consumer staples, and materials, all looking pretty solid here, guys. And here's what we got for open positions. So I think kind of always good to go back and recap some of the ideas we discussed over the last few weeks here. So last week across a few of the rooms here, we did take profits in DBA, which is agriculture. And like I just said, if you have the buy signal, you pretty much set an alert around 22.20-ish. You kindly ask Thinkorswim to give us a heads up here if we can pull back, and you buy that pullback. So we got rid of DBA, but we'll jump right back in. We also took profits on Raytheon. We'll buy that next dip, and then we did have a call debit spread on the energy sector. I still think it's got more gas in the tank, but we took some profits there ahead of the 3-day weekend. And then as for open positions, we got some Oxy. We have got some SLB. Notice the theme though, right? These are all uptrends. They got daily squeezes. Most of these have squeezes everywhere. 3-day, weekly, 4-hour, but it's good bullish structure. The financial sector, the industrial sector, the transportation sector, the semiconductor sector, the S&Ps, the QQQs, the IWM, they don't have any of this right now. So I think you can short those spots in the market, but here's some good stuff for the upside. So we got some Oxy, some SLB. What else do we got here, guys? We got some steel, uptrend, got the green lights, got the buy signals, daily 4-hour, 2-hour squeeze, all good stuff. So we got some steel, and then you got some GLD here as well. And we'll look at the gold futures. But I'll tell you what, though, gold is starting to shape up here. So here's the thing. I don't think I would suggest you, it looks pretty good here. I don't think this is where I would suggest you load the boat. So maybe you can scale into your position here and then add on the pullback. But I think all in all here, focus on gold. Weekly and day stacked EMAs. So for your weekly chart and your daily chart, you've got the bullish trend and structure. You got a good backbone. Then you got the green 10x bars. So the weekly chart and the daily chart, both of those time frames got bullish momentum. Then you've got the daily squeeze mixed with the giant monthly squeeze. The monthly squeeze is just starting to turn positive as far as the histogram goes. And not that we're looking for the same exact move, but just in terms of like the function of a monthly squeeze here. If you look back at 2018, 2019, gold prints a monthly squeeze. You get consistent support above the monthly 21. The histogram goes from red to yellow to light blue. So bearish momentum, the exhaustion of that bearish momentum, and then some good old bullish momentum. That can trigger a pretty good move. So again, I don't think I would take a huge position just yet. Maybe you scale in, but I think into May, June, July, September, that monthly squeeze could trigger a pretty good trend here. But there you have it, guys. That's what I got on my focus list here as far as bullish opportunity. Some energy, some healthcare, some consumer staples, some materials, and then some gold. Um, real quick here, guys, as far as the short side goes, there's a lot of it. So you look at the semiconductors, bearish trend in structure, bearish momentum, sell signals. So in my book, that's a short. But I'm not going to short it down here at -2 ATR. Right? So the same advice that I give you on gold, where it's like, yeah, I think gold looks pretty damn good here. But I think you're going to get a better entry back at the 21 EMA. Right? So when you have buy signals, you're going to buy the dip into the 21 EMA. Then when we have the sell signals, you want to short the pop into the 21 EMA. So for the same reasons, you want to be really careful getting long Tesla up here. Guess what? You also want to be careful getting short Tesla down here as well. It works both ways. But if you can get a bounce here in the semiconductors, I think that sets up a short. So you start looking at some of the SMH components, AMD. I think you short the bounce. NVIDIA kills me to say it, but I think you short the bounce. Everybody can catch that fade. Micron, Qualcomm, all the qualms. So the semis look like a short. Then you've got XLK, big tech. Do I think you short it down here? No. But I do think you look to short it potentially on that bounce back at the 21 EMA. So then you start looking at XLK components, right? All of our favorites, Google. Pretty rough. Microsoft, looking pretty rough. Anyway, I guess Apple's the best of the bunch, but not the prettiest. Amazon. I think big tech. I think the semis. I think the financials. Now, to keep it simple here, guys, if the financials have sell signals, if the semiconductors, big tech, the industrials, the transports, if a vast majority of your sectors, and to get a bit more specific, these are some heavily weighted sectors. Big tech, big semis, the big financials, those are stocks and those are sectors that make up a big chunk of your market, the S&P 500. So what I'm trying to say here is if almost everything's looking bearish, you can basically just kind of simplify the process, look to short the overall market. And the beauty of that is the S&Ps could fall apart here. And I think we still continue to see good trend in gold to the upside, energy, right? The steel stocks, the materials. The S&P 500 can roll over here and those trends can still continue. The S&P 500 rolls over, you're probably going to be in pretty bad shape being long Microsofts, being long the NVIDIAs. basically being long anything with the sell signal. So there you have it, guys. Market opens up here in 30 minutes. So we'll take a quick look at the futures. But I got to tell you, though, the last 3 to 4 weeks, it's just been a good feeling, not even really focusing or, quite frankly, caring what the overall market does. Like, none of my trades, none of my decisions over the last month really have anything to do with the S&P 500 or inflation or Ukraine. It's just really more so, hey, where can I find a daily squeeze that has my buy signals? Right? If it's energy, I'll take it. I mean, here's some random shit. GTE. And a lot of you know Sam from the options room. He mentioned this one to me on Thursday. I think he got it from TG. The point being is I got no clue what this company is. Like, it's obviously energy, but I've never looked at this stock before. I've never traded this stock before. But damn. Daily squeeze, buy signals, weekly daily stack DMAs, bullish momentum. Every day of the week, I'm going to buy that before I buy AMD, NVIDIA, Google right now. And that's kind of been the common theme. I've also never traded agriculture over the last 10 years. Daily squeeze with buy signals. I've never traded LMT, never traded Raytheon. So the moral of the story there is a lot of what worked last year and back in 2020, buy the dip, get long that bullish daily squeeze, day trade that bullish 30-minute squeeze. A lot of what was working over the last 2 years is still working in this market, just not in those same spots. Right? So at the moment, that quote unquote bullish playbook, it's just not working in the financials. Semiconductors, the transports, but that buy the dip action is working great in agriculture. Right? Obviously, it's working great in energy. There's fertilizer stocks that trend-wise and structurally look like just superior to Amazon, Apple. So be open-minded, guys. And for me, that was I think a really important shift over the last month or so is for me just kind of looking back at like the last 8 or so years of trading, and it's like, hey, when I focus on literally nothing but like this right here, without really getting too concerned at all about what the stock is itself, but just a straight up focus on this setup, I always have my best trading. I'm always my most profitable. I always have my best win rate, but more importantly, I got my peace of mind. Basically just looking to rinse and repeat. So the trade that we have on Oxy right now, for example, or SLB, like in no way, shape, or form have I jumped into this trade trying to make this the quote unquote trade of the month or the trade of the year. It's just a good looking setup. Right? We're taking a shot here, and we're trying to take as many shots as possible. So maybe some things for y'all to consider in this interesting market of ours, but that's kind of the major thing. That bullish playbook that worked really well over the last 2 years still works really well. Just got to be a little bit open-minded and kind of expand your horizons, so to say. But there you go, guys. We got a few minutes left here before I got to jump onto the mic in the options room. Gonna heat up a coffee real quick. But if you guys got any questions here, throw them at me. Otherwise, I'll cut you loose. Hey, good morning, Jay Saint. Good morning, Ty. Mimi Girl, Sean, Terry. So Sean, the buy signals and the sell signals, that's it's still a work in progress. Looking like we're gonna be all done and able to release that come June or July. Is it June or is it July? This summer, Sean. Put it that way. Because here's the whole thing with this. It takes into consideration, like as far as like what goes into the buy signal or the sell signal. It's taking into the equation like 3 or 4 of Simpler's premium indicators, but the thing is it's across different time frames. meaning I can't get my daily buy signal unless the weekly chart and the daily chart both fit the criteria. So what we're trying to work on now is, can we get a 4-hour buy signal when the 4-hour chart and then the daily chart, right, the chart above it, are both perfectly aligned? And I would like to be able to do that all the way down to the 5-minute chart. So still some work left to be done there, guys. And then Ty, I think X looks awesome. X looks awesome. Ty, check out the 4-hour squeeze. So not to say it has to explode here, but a lot of times this is my favorite entry. This is actually kind of a good example. So based on my criteria that goes into the buy signal, the daily chart is like picture perfect right now. So what I would like to have now is a buy signal here on the 4-hour chart, because the 4-hour chart is also picture perfect. And a lot of times that 4-hour squeeze, that's going to be the nice entry. Because once this fires long, the rule of thumb is once the squeeze fires, it could last for 5 to 8 bars. This is a 4-hour chart, so you get 5 to 8 bars in a 4-hour time frame. Usually that can trigger your daily squeeze. And a lot of times where this takes place is off that daily 21. So that can be a lethal combo. Find a stock in an uptrend with a daily squeeze, and then at the daily 21 EMA, try to find a squeeze on the 4-hour time frame. And then you're looking for the shift in momentum. This is getting pretty close. So the histogram's not positive just yet, but it is getting pretty close. So you mix that with a great daily squeeze, like an X here, like an X a lot. Hey, good morning, Janice. Is it too early to buy PFE? So that's a good question, Janice. I think it depends on the move you're looking for. So say I'm looking for a move to unfold over the next 30 days. Well, from that perspective, I think everything kind of lines up here. We're above the 21. We have the daily squeeze. We have the buy signals. Maybe instead you're looking to nail a move in a, call it a 3 to 4 day window. What I would do then is you're going to focus on those lower time frame squeezes. So for example, say we're looking for a pop to happen sooner rather than later. Janice, here's a pretty good example. If I was looking for like a really short-term pop, if I look at the hourly squeeze, I'd say, yeah, I think it's a little bit early, because I'm going to judge this hourly squeeze just like I would judge a daily squeeze. I want to see it trading above the 21 EMA. I want positively stacked EMAs. I'd like some green 10x bars. So when the hourly chart lines up like that, it's typically gearing for a move, again, sooner rather than later. So the daily chart looks great. And as long as that's the case, there might be some back and forth here, but it does look pretty good for a move into higher prices. If we're trying to nail this a little bit, shorter term, trying to time that trade a little bit better, I would kind of look at the hourly chart here and say, okay, if this can get above the hourly 21, if we can shift the histogram, get some stacked EMAs, then it might be gearing up for a nice pop. So I think it kind of looks, all kind of depends on, are you looking for a move over the next 4 to 5 weeks or 4 to 5 days? Then you just focus on different time frames. There you go, Ty. Ooh, Jay Saint, that's a good question. That's a good question. How much gas, no pun intended, does natural gas have in the tank? Yeah, parabolic is the right word. I mean, hell, this is basically doubled since February. So I call that parabolic. Now, here's where this gets difficult, at least for me, okay? Because right now I want to buy UNG. So the difficulty is I'm looking at this back here saying, okay, it's a little bit extended, so I'm going to wait for my pullback. Saying the same thing over here. Saying the same thing up here at 20 bucks. Right, this is parabolic, so it's extended. It can keep on keeping on here. So, in terms of how much more gas could this have in the tank, let's go look at a few of these bigger time frames. And again, it's extended as hell, but here's the interesting thing. We're only 2 weeks into firing that weekly squeeze to the upside. I'm not going to buy it here, and I'm going to continue to sit around and try to buy it on the pullback. But in terms of the quote-unquote totality of the move here, take that rule of thumb. A good squeeze could give you 5 to 8 plus bars of momentum. We're only 2 weeks in here. So again, I'm not going to chase it, but I think on a good flush, it might just get picked right back up and continue to squeeze to the upside. So this is kind of what I'm looking for. Even a little something like that. Just come in here for a few weeks, then we get the push. Yeah, good question. I wouldn't buy it here. And it's kind of one of those things where sometimes as a trader, you got to pick your poison, right? So the poison I've chosen is, okay, I'm not going to chase it. And that might mean I have to sit here for another week, 2 weeks, 4 weeks, just watching this rip to the upside. I'm okay with that, especially in this market because, all right, I'll wait for natural gas to pull back. In the meantime, I'll trade SLB, I'll trade X, I'll trade energy. There's a lot of good setups out there we don't have to chase. So I definitely wouldn't do that. But here's the other alternative. We chase. God forbid you happen to chase right at the tail end of that move. You get caught up in a pretty nasty flush. So I'm waiting to buy that pullback. But all right, guys, I got to cut you loose here. Got to go pour a cup of coffee. Got these guys outside cutting the grass, making all kinds of ruckus. But as always, guys, I appreciate you tuning in. Hope you found some of this helpful, and I will see you again Wednesday morning. Be good, guys. Talk to you.